So while Megan's having a snack, I've got Larry Stone here from Stone CPA. How are you doing this morning?
Well, I was okay until you just made me so hungry for a Kind Bar.
Well, you can have a Kind Bar too, but first you have to tell us about what's going on with this new tax law that's recently been passed.
Well, so what's happened is Congress passed a new tax law in December of last year. Now, it takes some time for the IRS to actually tell us what we should be doing with that law and what the regulations are going to be. So last Wednesday, the IRS issued the proposed regulations on the qualified business income. And I'm just going to tell you, if you're a W-2 employee, this may not be directly a big deal, but if you're a business person, this is a big deal. And if you're that W-2 employee, this is what motivates that business person to go out and hire more people, right?
Okay. So what types of businesses are eligible for that then?
Well, we're going to see a lot of businesses here in Summit County eligible for it. It's all the small businesses, not the big corporations like Arapahoe Basin, right?
Okay.
They're not going to get that advantage. But the small sole proprietorships, the retail stores, the rental companies, that new bike rental company, e-bike in Breckenridge, they're going to get advantage of it. And it'll be all those situations. Plus, if you rent your property out, say you're renting property out short-term or long-term,
like Airbnb or something like that.
You'll get advantage of doing that.
Okay, that's really cool. So where is the deduction taken then?
Well, so what happens is you calculate your business income and subtract out your expenses, and then the owner of the business takes that deduction on their individual tax return. It's actually 20% of their qualified business income. They get non-cash deductions to reduce their taxes. And what's so great about it is they lowered the corporate tax rates for the big guys like Bell Corporation and Arapahoe Basin. They lowered their taxes down to 21%. And this is the way the Congress actually spread that to the other small businesses. Small businesses hire 70% of the people who work in the United States. And so this gives more money so they can actually put it to work in their business.
All right. Are there other limitations to consider?
Sure. It is progressive in the nature that there's limitations on the amount of income the individual can have in order to get this deduction. So if you're married filing joint and your income is greater than $315,000, you're going to have to jump through more hoops. If you're a single person and your income is greater than $157,500, hard to say that, right?
Right, that's a good number.
Then you're going to have to jump more hoops. But basically, if you're under those limits, then you get to take that full 20% deduction off your taxes and reinvest that in your business.
That's cool. So what do those proposed regulations mean?
Well, it means that the IRS has finally come up with how do we interpret the law that was passed. And it's going to tell us who qualifies for it and who does not qualify for it. It defines what a personal service business, because we know personal services businesses don't qualify, and who's going to be subject to that. It defines who you consider to be employees, because you'll be limited if you're over those limits. I talked about the $315,000 and the $157,000. You're limited in the deduction you have by the amount you pay your employees, right?
Right.
So you get a bigger deduction if you pay your employees more.
That's a good plan. People would love that. So what would you recommend that someone do in this situation then?
So really, this is a time and situation where you should actually take a look at your tax plan. Stop and think. I work out all year long to go to A Basin and to Copper Mountain to go ski. So why wouldn't I put that kind of effort behind my financial circumstances? So you should actually do a review of your tax plan to make sure you're doing everything you can to get the most deduction possible.
Right. That's really great and smart. And lots of people need help, don't understand the taxes as much, so they can go find you at Stone CPA.
Yeah, we'll be glad to help you. We'll do a free analysis of your tax situation. If we can identify a way to save you money, we'll donate $200 to your favorite charity. And you can reach us at 970-668-0772.
Oh, that's fantastic. Well, that's very generous of you all, too. Very philanthropic.
Well, we try to do what we can for the community, and quite frankly, when you're working and aligning yourself to reduce your taxes, you're doing the best financial defense. And that actually helps you accomplish your financial goals. Whether you're trying to send your kids to college, pay off your college debt. My employees have a big motivation for that. Buying your first home, even making sure that you have enough money for retirement, or just paying your medical bills. You know, taxes, when you get your paycheck, 40% of that paycheck is often gone to pay for taxes before you even get a chance to prioritize how you want to accomplish what you want to.
Right, so figure it all out. Thank you so much for coming on and giving us some great information this morning. So I'll let
You're
you
welcome.
get on out. And everyone that's watching, we're going to want to stay tuned, because after this break, we're going to be coming back and have our Watch and Win. And remember, we're giving away $25 to Tiki Mana and $25 to Bangkok Happy Bowl. Oh, it's Northside Pizza and Bangkok Happy Bowl. Sorry, we were watching Tiki Mana earlier and I had my mind on that. So vary it up a little bit. Don't go anywhere. We'll be right back.